All right, everyone. It is 19th of October 2024, and we are almost at the afternoon of the day. Apart from that, let's quickly have a look what we had over the last Thursday. It was ECB policy rate decision, and the bank did cut their interest rate by 25 basis points of cut. It was widely expected. They do have released their statement, and we will touch on that later. But before that, I think it's a very good idea that we should go through what we had uh, on the prior ECB meeting. The prior meeting was held on September 12th, and I have I have here the ECB projections. If you can have a look over here, and we don't have to go through all of the statement they release. We solely focus on major components, which is growth, inflation, and also sometimes we focus on PMIs and other surveys. But today we're gonna totally focus on GDP right over here, and HICP inflation. Now, uh, so ECB staff projected on September that they think that the growth gonna stay close to 0.8% by the end of 2024, and the inflation can stay close to 2.5%, and the core inflation can go up to 2.9% by the end of 2024. Now, these are the projections what the bank think, and if we look at the data. So let's talk about the GDP growth. Okay, so the GDP growth, we can see that the ECB staff projections. Now, these are the projection economic consensus economy service of professional forecasters. These are the other players in the market, and these are their thoughts that they think where the GDP by the end of this year can land on. However, we're not going to pay much attention to this data. We're just going to pay attention to this projection, ECB projections. That's all. Okay, I'm going to highlight it like that. So these are the projections we solely pay attention to. Now, we were talking about the GDP 2024 GDP bank forecast that is gonna stay or can get to 0.8% by the end of 2024. Now, if I show you here the GDP of Euros area GDP annual growth rate, though this is a, I think I have already mentioned in my other videos that the trading economics is like having a free refined TV. Uh, Getting the time graphs from any particular country up, it doesn't matter. It can be about the growth, it can be about the inflation, can be about the unemployment rate. I mean, you name it. If you want to have a free resources, I think tradingeconomics.com is the best way to have a timely graphs. There are plenty of others, and I mean, everyone have their own suggestions on it, and everyone is open to use their own resources. However, I found that the trading economics, I mean, it's a perfect platform for me. I can't say that it can be perfect for you. Now, look at the timely graph. You can see that the quarter two 2024 GDP came in 0.6%. And if I get you back to the September 2024, the bank expected that it can rise to 0.8%. Now, with that being said, the bank think that the GDP will go up uh, to 0.8%. The current is 0.6%, and if I say that we're gonna have GDP coming September 30, 0.6% is prior. It will be focused on hugely that what we get this data, how we get this data, how gonna get a good or bad. It's just gonna come consensus. We don't have consensus yet, but we will get when the date gets closer to October 30. Now, with that being said, The GDP out from euro area is currently sitting at 0.6%, which is we think is under what banks thinks, which I think which clearly clearly give us a direction that the bank has to cut more interest rate policies in upcoming meetings in order to see the growth picking up. So, uh, talking about inflation, 2.5% 2024 is what uh, bank is expecting. 2024 2.5%. Now, uh, looking at the economic data we just got released CPI reports out of eurozone. We can see the year of year is 1.7%, which is way below than what a bank has projected. And if we just look at the timely graph, we can see that the inflation is heading to really right path, and it is the lowest since, I don't know, back to 2023. All I can go, we can see that there is no such print like we had on Thursday 17th, 1.7%, so which is clearly dovish, signaling that the bank may be behind the curve. Okay, the policy is too much restrictive right now, that the inflation is has fallen underneath their target 2%, and the growth is plummeting 0.6%. So it gets really tricky for the bank to not to say that, hey, we're not behind the curve, but market may be thinking that the ECB is not cutting 50 basis point cuts. They're just moving with 25 basis points of cut. They should go for 50 basis point cuts in order to see a nice pickup in the eurozone, with some inflation not going into deflationary mode. No, if we just look at the core inflation, excluding energy and food, the bank expect that it's gonna stay close to 2.9% by the end of 2024. And if we go here, we can see that it is sitting at 2.7%, which is also below what bank thinks. So again, we do have seen 2.7% on 05/17/2024, and we also have seen the same number coming 2.7% on after 5 months of of time. So now, what we can get from from this economic projections out of euro is that growth is down, inflation is down, and the core inflation is down. Technically, from what the bank think. So going for more cuts is not going to be out of the ordinary. I think as we have seen 25 basis points of cut on Thursday, on last Thursday, market is fully pricing in 25 basis of points of cut in their next meeting. Now, uh, with that being said, that was the September meeting. Uh, And the statement, if we look at, I just got that on my hand here, Forex Live and Justin Lowe pointed out some of the key bullet points out of the statement, a September statement. We do know the main refinancing rate, 3.65% expected. Pure was 4.25%. Deposit facility rate was 3.75%, down by 3.5%. There wasn't much to look for out of from the last September meeting from ECB. However, uh, if we just summarize it in a few words, then here is the statement, as a summarized statement. As of for the statement, there are no surprises, as the ECB flags that inflation is still a risk factor going into quarter four this year. So uh, we we didn't get any surprise out of the last September meeting, and the pressure we had. The President Lagarde just stick to the data dependent approach, and the press conference ends without any fireworks or surprises. So now let's talk about Thursday's ECB policy rate decision. Now, the questions I want to ask myself out of this ECB meeting is that what information we can squeeze out of this event we had, and what we can predict about Eurozone, and what important data points to look for. So let's cover first question: what information we can squeeze. So solely just solely looking at the ECB press conference, uh, 25 basis points cuts was widely expected. Uh, okay, so let me just show you guys my Excel sheet here. I let me just bring that up. Okay, right here. So I have actually bulleted some of the major points we can have out of the last Thursday policy decision. So let me just delete this one. I think I don't need this anymore. Okay, so ECB cuts key rates by 25 basis points in October monetary policy season as expected, as it was widely expected. So the first key point I have marked is incoming information shows that this inflationary process is well on track. What does that mean? Means that the inflation they are having right here, I just have showed you earlier that this inflationary process is well on track, that the inflation is heading right to the path that it has to be. So 2.7% is well below what the ECB thinks, alongside with the year of year sitting as below 2% target. So moving back to the commentary section, inflation is expected to rise in the coming months before declining in target in the course of next year. So this one is a key point out of the US. So in upcoming data, what we're gonna assume that the ECB thinks that it can rise in upcoming months, but if it doesn't, then I mean we have it. We can make some shorts out of this out of the inflation data. Uh, Lastly, from the statement, this test said the ECB is not on pre-committing to a particular path. What does that mean? That means that the ECB was on a one cut, one pause, one cut, one pause. Now they're saying that we did that in the past doesn't mean that we're gonna be on this path for longer period of time. They are not committing for anything. They can go for a hold, they can go for a cut in the next meeting. So overall, from the statement, we did not get much of the information out of the statement. It was just as expected. We had, I think we there wasn't much of a change from the September and October monetary policy statement, but the remarks here, I have noted, I have copied from Forex Live. Uh, uh, Besides the rate cut itself, there are no changes the policy communication by the ECB, as we have as we have discussed already. And lastly, 122 basis points of rate cuts, more until June next year. That will represent a 25 basis point cut at each meeting until then. So what does that mean? That by the end of next year, October, the market is pricing 122 basis point of cuts. I mean, that is a lot of basis points of cuts. The thing is that like FOMC, like Bank of England, other banks, they do give some sort of idea that where the main refinancing rate can land. But ECB, I think they don't give any sort of rate prediction that where they think that the interest rate can land on by the end of the year, or maybe by the end of the next year. So 122 basis points of cut is what we have right now by the store markets, that they can go for another 25 basis point cuts by the end of this year. Now, after that, we had opening statement from Lagarde, and she has seen some worried about the eurozone economic data they had over the course of last month. Economic activity has been somewhat weaker than expected. So, with this statement, she clearly seems worried about about the about the weakness uh, they have seen, especially from the PMI's figures. I mean, manufacturing PMIs. I just had that on the table. Let me just show you guys again. Uh, Manufacturing PMI is I think was close to I think 40 45, I think, or 47. uh Let me just I think services is right here. Services is in expansionary territory, but I think it is having giving me such a hard time to find. Manufacturing PMI is right here. So prior was 45.0. Okay, so I think let me see if they can show a timely graph. uh no, I don't think so they have timely graph of this. However, manufacturing PMIs is down. 45 is a way below from 50. So it can take quite some time for the bank to go for not for the bank, for the economy to go for to reach to reach at 50 50 point for the manufacturing PMI. So uh, Q&A, uh, she said all the data is headed in the same direction, to the weaker than expected. What they is I think she trying to say. And from the remarks I have highlighted, that Lagarde has mentioned soft PMIs, as I have mentioned about the manufacturing PMIs, that the survey 4 or 5 times in a clear indication they are worried about the growth. The growth is, as I said, is down 0.6%, is not picking up as fast as it should. 0.8% seems too far for me as of now. Maybe on October 30th, we do get some nice bump higher in growth. But before that, I think looking at the at the critical data is the most important thing right now. So, in a nutshell, what we can squeeze out of this meeting, I mean, nothing. There is the ECB is such a waste of time for me, that they do not give a clear thought process to the markets. I mean, it's such a pain in the last few months, that we just try to get focused on what they have to say, but they just the question the market asks to the Lagarde, and the answers never get relevant to the question. So I mean, you got it right. So it gets really hard, and so there isn't much we can squeeze out of the statement, out of the Q&A. But we do understand that the growth and the weaker data is the main thing that the bank is worried now. So uh, what we can predict about Eurozone. So it solely depends on the data. We do understand that we have inflation below what the ECB projects. We do understand the growth is below what ECB projects. Core inflation is down. PMIs manufacturing PMIs is down. Services is just a tick up from 50. So the data is coming out of the eurozone is going to be the most important data from now to the next meeting. I think the next meeting is going to held in December. So between this month we're going to get plenty of data out of euro. So manufacturing, services, uh, GDP, and inflation figures, everything is very very important for the euro. And as the bank does not give us a clear bias that what they're going to do in their next meeting, they just said they're going to be a data dependent. So it is hard to say that the which direction the currency will go. So it depends on the data, and we will wait for the data to come. So what data we should look for? As I mentioned, manufacturing PMIs important, GDP very important, unemployment rate, labor data, CPI reports. These are the data is gonna be very important before the next meeting coming out of eurozone. So my bias, I mean, I don't have a clear picture in my mind. I do have data points on my hand. I do have press conference on my hand, but getting a bias, getting a thought that which way the bank gonna go is solely depend on the data, and I'm just confused on that. So with that being said, uh, I think we have reached at the end of this video. So as always, if you have any questions, don't hesitate to let me know.